none of the recommendations that I've given and people have accepted has turned into a bad situation.
Okay.
It's usually when they don't take someone's advice, either mine or someone else's, or they think they can do it on their own. Occasionally, you'll meet the accountants, lawyers, and family office people who say, we can plan this tax liability away. A classic example is a wasting freeze. So a freeze is when you exchange your common for preferred shares at a fixed value, and you have now your tax liability. And the idea is to waste the freeze. In other words, have the company buy back the frozen preferred shares to create income as a retirement for the shareholder who's given up control. The problem with that is you have to have certain things, refundable tax and other things in place to be able to make that make financial sense. Or the person simply is making too much money in other areas. So why am I going to generate more income that I can't use at a higher tax rate? So the freeze gets delayed, the wasting freeze. Now you've got a big tax liability, and nobody knows when their number's going to come up. So sometimes you're a quarter through the wasting freeze and an event happens, and now we've got taxes to pay. So insurance is full value from day one. That's what people need to understand. Sure, there's a cost for insurance. It's not free, because if something happened to you next week, it pays out. Nothing else will do that. You start some sinking fund as an alternative, you're never going to get there until way down the road. Things happen between now and then. And life changes. Your cash flow changes. Your marital situation can change. Your business situation can change. You can have a falling out or take on new partners. Life has its curveballs. Life insurance from day one has been the safety net to protect all those situations. So making errors is probably not heeding everybody's advice in terms of you should do this. You should consider this for protecting the value that you've built up already.